Welcome back. Still with me in the studio is Michael Fridjhon, wine expert. We're talking about investing in wine. Let's come back to this Asian wave that you were talking about in the first part of the show, Michael. And you were saying it's investors are starting to think that maybe it's feeling a bit of the heat right now, which is causing prices.
It's certainly reassessing its willingness to overspend. I'm going to look at a 30-year period because this is an important era in the history of Bordeaux wine. And it's an era that was fueled by several waves. The first was, in fact, the American wave of the early mid-1980s. A new voice in wine appeared on the scene, a fellow called Robert Parker, who is the Pope, the Emperor, the whatever of wine. He introduced a so-called 100-point system called Parker Points, where the very best wine is worth 100 and the undrinkable is worth 50. And he took a view on the 1982 Bordeaux vintage ahead of everyone else and said it was extraordinary. And his Wine Advocate, which was his publication, punted the wines and drove a lot of interest to 1982 Bordeaux, and that view has been vindicated. So people who bought 82s for, who knows, I can't remember how much, but say 500 to 1,000 pounds a case in the early 1980s can now get 20, 30, 40,000 pounds a case and are feeling very good about their investment. And it's that kind of performance that makes the index look really good. So the Americans came in, and the vintages that Parker believed in, so 82 to a lesser extent 83, then 85, then 86, all the way through to the 90s, were great investment vintages. There was also, for all sorts of reasons, including global warming / climate change, fewer good vintages in that the first 2 decades. The 80s had a good run, the 90s had an appalling run. The last 10 years, however, has just been one great vintage after another. I mean, in the last decade, we've seen at least 3 vintages of the century. Now, that's pushing it a wee bit. So that every time there's another great vintage, the speculators have to dig deep into their pockets and do some shopping. The Americans, over time, have withdrawn a bit from the game. There was another Asian wave which ended when the mid-late 80s from memory. But the Asians have come back very strongly since then, driven by, obviously, Chinese demand, and driven very particularly by a change in legislation in Hong Kong, which over the last few years has seen duties on wine abolished for Hong Kong, making Hong Kong the biggest wine trading point in the world.
Now that to me is very interesting, because surely that's the Hong Kong government looking forward and saying, let's scrap the duties here. I mean, you were talking about an investor in South Africa paying 14% VAT.
The Hong Kong government was extraordinary. I've studied this thing fairly carefully. They did everything correctly. They took duties down over a 2-year period so that the stock that was in the trade wasn't instantly grossly overvalued. People who had paid their duty had a year or 2 to move that stock through the trade, and it was essentially consumer stock. Stuff in restaurants, stuff in hotels. Once they abolished the duties and they declared that the full duty would vanish, they also set about setting out the correct storage conditions, and Hong Kong storage is now government certified. So if you put your stock into a government certified store, you know the temperature conditions are correct, you know the humidity conditions are correct, and you know that you have reasonable guarantees that what has gone in is your stock and not something that got exchanged behind doors and a fake suddenly emerges. The question of fake and counterfeit is very important in the East, and the Hong Kong government, more than anyone else, has understood that if they wish to be the kind of Eastern hub of wine, they need to manage the question of counterfeit as well. So they've done all those things, and in that period, 3 to 4 years, Hong Kong went from number 3 or number 4 place of trade for auction wine to number 1. Past London, has now passed New York, and it's right on top of the pile. The fact that much of what is traded in Hong Kong is not yet in Hong Kong is an indication of how the auction market works and how it used to work before there was a Hong Kong. There's huge storage in the UK, Octavian, Corsham. Those guys have got underground mines, etc., that are laid out for wine storage, and people who speculate in wine never see the stuff sometimes. You buy 10 cases of Lafite lying in Octavian, and I buy it from you, and 3 years later I sell it, and the new buyer is happy to leave it lying there. So the stock doesn't move, the ownership certificate moves.
Okay, now this whole futures market in wine, how's that working?
The Bordeaux futures market runs very simply like this. The vintage takes place in September, October of the year. Mm-hmm. By March, April, the first tasting samples are made available to the trade and the press. There is then a huge party in Bordeaux in which literally thousands of people who are punters, experts, traders descend upon Bordeaux for the primeur tastings. Now, in fact, as Jancis Robinson pointed out in an article last year, it actually is a bit of a con, because what you get to taste is seriously unfinished wine, and the producers, if they're less than honest, can select the barrels and select the cask so that what goes into the tasting is better than a representative sample of the entire vintage. Once that has happened, you taste the wine. Robert Parker gives it a score of 97 or 98. Jancis gives it 18 or 19 out of 20. The various commentators have their say, and that wine then has a rating. And on the strength of that, the punters either invest through the brokers in select wines, or they buy the whole vintage, in the sense that they say, wow, 2009 really is the vintage of the century. I'll buy whatever I'm allocated. The Bordeaux guys get their money in.
So the farmers are getting their money in, what, 6 months after they've...
6 to 9 months after the vintage.
That's a great position to be.
2 years before they're going to deliver the wine. The wine is generally released 18 months after the futures. So the money is in the bank, the sellers have done brilliantly, and now the punter is sitting with the wine, hoping that by having secured it at source, he will ultimately be able to speculate more profitably.
Jeepers, talk about shifting the risk all the way down to the punter.
Absolutely. Now, the problem has been that the market has done that for the last 5 to 7 years. It hardly glitched over the 2008 banking crisis, and Bordeaux has become very greedy. 2009 was the vintage of the century. Parker admitted that it was so good that 100 points on his previous scale was insufficient, and there were some 100+ wines. And then all of a sudden comes 2010, a vintage with a completely different personality, but which many people say is at least as good as the 2009. And the Bordeaux trade, instead of saying, I wonder whether there's enough money out there for this, ups the prices on the already super elevated 09s, and there was a lot of resistance. So to answer the question about why the Asian wave is slowing down, they've said, hang on a second. Nobody took all those 2010s. There's a stock overhang. Meantime, 2011 vintage has come along. It's yet to be rated, but we know it was much more problematic. So there's another stock overhang. And so all of a sudden, people are becoming slightly more picky about the vintages they're investing in, which means, to go back to the guy who bought en primeur, it depends when you did. If you bought the 2000 vintage en primeur, you're doing very well. If you bought the 2005s, another great vintage, en primeur, you had a great run, you had a glitch. In fact, the only vintage of any real glitch in the financial crisis was 2005. That glitch rectified itself very quickly, made easier by the fact that the 07 vintage wasn't all that great. But now all of a sudden, there's a lot of stock, and all that stock's been bought by speculators. So not a huge amount of it is actually being consumed. And anybody who does a serious bit of arithmetic about how much investment wine is out there will start saying to themselves, this market is overheated. It's time to step back and wait for it to correct.
Okay, so we've spoken about this, the exchange on the London Stock Exchange. Yep. That to me so far is the easiest way to get into wine.
And you can do it through Hong Kong or any other auction place. In other words, as long as you can trade efficiently, keeping it in one place, paying just the storage, not handling your stock, and selling it easily is the way to go.
We've spoken about making wine out of storage. Mm-hmm. We've spoken about the futures market on it. Now, I want to buy a wine farm.
Yep.
Right. My name's GT Ferreira. Pleased to meet you.
You know what GT said about doing that?
What?
He says, wine is the only place where ROE isn't return on equity, but return on ego. Wine farm acquisition as an investment, it's an interesting game. Very few people make money in that business. What you can do, if you really do have deep pockets and a real passion for what you do, is that you can identify a really good piece of land, especially in South Africa. France, it's more difficult. The land's all been identified, certified, classified. It's very difficult to suddenly find a Bordeaux property that nobody knew was extraordinary and in very little time turn it around. But here, you can buy a fruit farm at the top of a hill like GT did, and within 10 years be making some of the best wine in the country, and people will be interested in buying your property from you. So if in that 10-year period, you can at least get it to break even in terms of running costs, you will have a capital gain lurking in perhaps a slightly more bullish market than we have at present, because you have done the research, you've proved the value of the property, you've got good wine, you've got it in a break-even condition, and there will be another new investor who's made a lot of money who says, I don't want the hassle of doing all that work myself.
The fruit trees out and putting in the vines.
I've got it. I think the cellar design is beautiful. I have a place that I can live or a place that I can go to in the Cape, and I'm happy to pay over the top for the security that the other person's research and work has achieved.
Very briefly, because we are running out of time, any other ways you can invest in wine?
Well, the best investment, of course, is to buy the wine you like when you can get it, to cellar it in order to enjoy it, and to take your dividend in pleasure. That's the best and safest way that I know of doing it.
I like the way you think. I like the way you think. Michael Fridjhon, thank you very much for being with us this evening.